Hello everyone, I'm Oliver from Lux Trading Firm, and today I want to share with you a story. A story that cuts to the core of why we have the trading and risk management rules that we do. Today, there's not going to be any fancy graphics, it's just me and you talking, and I want to explain. You see, there's a common misconception that the rules are just hurdles deliberately put in place to make it harder for you to advance to the live trading stages. But nothing could be further from the truth. Let me tell you about a conversation I had with one of our traders not too long ago. This trader, like many others, was frustrated. He said, "Why do we have to follow these rules?" he asked. "Why can't you just focus on finding profitable traders who can make you as much money as possible?" It was a fair question, but it revealed a fundamental misunderstanding about the world of professional trading. And I think it is valuable for you to hear the answer as well. You see, the first thing any trader with real money thinks about is not how much they can make, it's about how to keep what they already have. Their second thought is how to grow it safely, steadily, and consistently. In contrast, many retail traders, especially those new to the game, are driven by one thing: the desire to get rich quickly. They dream of making 10, 20, or even 30% in a single month. But what they don't realize is that chasing those kinds of returns means taking on enormous risk. It's like trying to run before you can walk. Sooner or later, you'll trip and fall. And let's be honest, no one wants to hear that making 2 or 3% per month on a $500 or even a $5,000 live dollar account isn't enough to live on. We all know that. It's not the glamorous story of overnight success that people are sold on. But here's the thing, that mindset, that hunger for quick riches is exactly what sets retail traders apart from most successful traders in the world. Let me explain. Professional traders, whether they work for banks, hedge funds, or asset management firms, or prop trading firms, don't aim for those sky-high monthly returns. They aim for 1 to 3% per month. It sounds modest, doesn't it? But it's that very modesty, that careful, measured approach that allows them to be so consistent and successful over the long term. These are the traders who are the wealthiest in the world, not because they took massive risks, but because they managed those risks better than everyone else. But let me pause here and address a very valid fear that I know many of you have. In the world of virtual prop firms, it's no secret that some companies do make their rules harder just to make traders fail. These firms aren't interested in seeing you succeed. They make money from your fees, and the more traders fail, the more they profit. It's a tough reality, and it's left many traders feeling like they're caught in a rigged game. In those environments, the rules aren't designed to protect your capital or guide you toward long-term success. Instead, they're often designed to make you trip up, to push you into making risky decisions that ultimately lead to failure. It's a strategy that works in the firm's favor, but it leaves traders disillusioned, frustrated, and often broke. What keeps drawing retail traders back, though, are the lucky profits and high payouts dangled before them, promises that keep them buying new challenges. This is also what brokers use to lure you in, offering higher and higher leverage, while prop firms use the allure of big payouts. Now, contrast that with trading real capital. When you're trading with real money, whether it's yours or firms, the rules exist for a very different reason. They're there to protect the capital, to ensure that it's being managed with care, and to guide traders towards sustainable, long-term success. No bank or investment firm will ever use these lucky payouts to draw you in, because real capital requires real responsibility. When you're trading real capital, every decision counts. The focus shifts from making a quick profit to preserving wealth and growing it steadily. The rules we set are designed to foster that mindset, to encourage you to think like a professional, not a gambler. And here's something crucial to remember. All those banks, hedge funds, and asset managers didn't become successful traders overnight with high capital. They spent years in training, learning the ropes, and mastering their craft. So, if you have a winning strategy, it's entirely normal that it might take you some time to learn and study our rules, and to adjust your trading approach accordingly. Take the time and have patience. because once you understand the rules and align them with your strategy aiming for lower risk, you can consistently make those profits and grow your account over the long term, just like those bank, hedge fund, and asset managers. So yes, it is a valid fear. Many virtual prop firms do make it harder for traders because of their business model depends on it. But when you're trading with real capital, the game changes. It's no longer about beating impossible odds, it's about managing risk, growing your wealth, and building a career in trading that actually lasts. At Lux Trading Firm, we don't want you to fall into the trap of quick riches and high risk. Our trading and risk management rules aren't there to make you fail, they're there to protect you. They're there to guide you towards sustainable growth, the kind of professional traders have mastered. We want you to use the capital available to you as a tool for steady, consistent gains, just like the banks, hedge funds, and asset managers. Remember, trading is a marathon, not a sprint, and the most successful traders are those who understand that slow and steady actually wins this race. They're the ones who focus on keeping their money safe and growing it carefully. And that's the mindset we want to instill in you. It's important to note that 95% of the traders who didn't make it with us were the ones who never read the rules, misunderstood them, or never reached out to us for clarification. Take the effort to first read our rules, then understand them, and if you have any questions, check in with our live chat, our ticket service, our phone desk, or even your personal mentors. Better yet, consider starting with our elite package that include direct access to our risk desk. If you do all that, then there's no excuse for not passing the valuation account, breaking any rules, or not understanding the rules. So the next time you look at our rules, I hope you'll see them as what they are. Not obstacles, but stepping stones on the path to long-term success. Thank you for hearing me out. Thank you for watching this video. Let me know your thoughts down in the comment section below, and I'll see you in the next one.